I'm Charlotte McLeod with investingnews.com, and here today with me is Rob McEwen, Chairman and Chief Owner at McEwen Inc. Thank you so much for being here. Great to have you.
Wonderful to be here, Charlotte.
Really good to be catching up with you as always. And for people who are paying close attention, they may have noticed I introduced the company by a slightly different name this time around. So McEwen Inc. And this is a recent name change.
On July 7th, it became official. And we went from McEwen Mining to McEwen Inc. And that was really just to give us more latitude in terms of what we're doing. So it's still in the mining space, but we're doing some work on recoveries and trying to improve that in certain ore types. And there are a couple of other areas we're getting involved with.
Okay, makes sense. Thank you for going into that one. Nice and concise. I like it.
And symbol's the same, still MUN.
Still the same. That's the important part as well. Very good. And I think we'll start by checking in with gold as we usually do. So much to talk about in gold. Our last conversation was back in March, and even since then, we've gotten closer to, I know, your long-term gold price target of 5,000.
Yeah.
Curious to know from you, if we come a little bit more dialed in, where do you see gold ending 2025?
That's an excellent question. It's hard to predict precisely where. I don't think the conflicts in the world are going away. Governments are spending, accumulating debt, and diluting our currency. So I think it has here we are mid-year. So give it 6 months. Maybe we're pushing 3,500.
I think that sounds pretty doable at this point. And as you're mentioning, these big price drivers for gold, they remain in place. We've talked a lot of times about debt issues in the U.S., and I think that is maybe a good one to go over today as we've seen the big, beautiful bill making its way into law. Thoughts on implications there?
The debt loads in America are very high, but it's not exclusive to America. Canada's quite high, and yes, European nations are. I just think it's very hard for politicians not to promise to give something and spend money on it. So, and the world doesn't seem to be wanting to be at peace. There's all sorts of conflict around there.
Yeah, the conflicts around the world, maybe I can get your perspective on the impact for the gold price, because I guess it's providing underlying support, but it gets a little complicated because sometimes when we see these flare-ups, it provides a short-term price driver for gold. But how do you see that?
If I look at history and the cycles gold's gone through, we have all the ingredients needed to drive it much higher. And the debt loads they're huge. I don't know how you're going to service them without cutting back on all sorts of other social services for the citizens of the United States, Canada, Europe, China. Yeah. So, it's heavy debt, and you got to repay it at one point.
You definitely, at some point, you definitely do. And taking a look at the U.S., so we're talking about big, beautiful bill. Trump is doing all kinds of things. I did want to check in with you on his impact on the U.S. mining space. We've seen a number of fast-tracking initiatives for companies and projects. How big of an impact will that really have? Because a lot of the time you see announcements and it doesn't necessarily translate into something.
It's for mining right now, it seems to be deregulation.
Yeah.
And you're seeing, because of the geopolitical conflict, you're getting all sorts of disruptions in the normal supply chains. So sovereign nations are running around trying to secure what they consider safe, reliable sources of metal. And you're seeing major corporations doing the same thing. So it's a race to see, the mining industry needs more capital. So how do you attract the capital to your country? And I can think of Saudi Arabia has been very much at the forefront doing that, saying, we've got lots of money. We'll give you money at low cost. We'll give you properties if you want to explore. And we're going to reduce the tax rate significantly, and we're going to allow you to own 100%. Well, in my mind, they're very disruptive because most countries view the minerals in the ground as their treasure, and they make it very difficult to get it out of the ground. So you have Saudi doing this. You have the United States now saying we're going to speed up the permitting. We want these metals, and various agencies will put money in for you to do that. Ecuador has done that. A couple of other countries are starting to wake up and saying, maybe if we have these metals in the ground, these minerals, maybe we should be producing them because we might not get it from the sources we used to get it from.
And what's your take on how Canada is approaching that? And I ask about the US and Canada because, of course, the company has operations there.
We're so backward.
Yeah.
We are so backward. I mean, mining has been around. It's been one of the foundational industries of Canada. And our government has not embraced mining. They tolerate it, but they don't encourage it, it seems. Quebec might be an exception, and Manitoba is leaning more positively to it. But I just look at it and I say, I was in the Middle East. I've been in the Middle East twice this year. Yeah. Dubai, Saudi Arabia, Qatar. And the one thing I noticed was, I noticed a couple of things. Very little litter. So people are proud of the country. Very little graffiti. So they respect private property. Very little homeless. So they don't tolerate that. Theft is non-existent. And yet there are all these beautiful buildings coming out of the ground. And you go, how is this happening? And it's all about natural resources. And I said, we come back to Canada, you go, look how big the country is. And it has all this potential. Why is our government denying the citizens of Canada a higher standard of living? And we need exports. Like the U.S. was the market where 75% of our exports went. So what do our politicians say? Well, we're not going to become the 51st state, which is just a red herring. And we're going to apply tariffs. And the first rule of customer relations is the customer's always right. Right? So all of our politicians say, well, we're going to punch them in the nose and we're going to put tariffs on. And you go, that's not going to win with this guy. But we aren't. We're starting to see some politicians say, well, maybe we'll put the road to the Ring of Fire in, and we'll do a couple of others. But it hasn't. And Doug Ford in Ontario said, we're going to try to fast track permitting. And then you got a whole bunch of other groups that say you can't do that. But we haven't got a vision for the country being articulated by our politicians. And mining is usually long life, high-paying jobs with technology coming into it. So I think that we're very far behind. We should be much further ahead. If we increased our exports, our dollar would be stronger relative to the U.S., maybe at par or at a premium, and our inflation rates would go down as a result of that.
So Canada, a lot of work to hopefully do. I had another question on Canada that maybe you'll be able to weigh in on. Listening to the presentations here, my coworker and I were talking the other day, hearing about all this central bank buying all around the world. Canada central bank doesn't own gold. And I wonder your thoughts on that. Probably not good. But do you think that's something that could change in the future? I know it's only recently been sold off. So any thoughts there?
Yeah, we sold all of our gold some time ago. In the late 80s, early 90s. You look at the BRIC nations and they're buying gold. And why are they buying gold? They want to dethrone the US dollar as a reserve currency. And I believe they look at it and said, well, the US, when it became the reserve currency in 1944, the Europeans said, if you're going to be the reserve currency, you have to have it backed by gold. And they basically diluted that away. And the BRIC nations are coming in and saying, well, we're going to provide an alternative to the US dollar. We're going to settle in our own currencies, but our own currencies are going to be backed by gold. Mm-hmm. And so would we ever do that? I don't think we have an enlightened politician class in Canada. And they don't seem to think, they didn't take economics. They didn't do any of that. They just want to get elected, and so they spend money, but not in the right places.
Yeah, very, very fair response. And, as we're talking about global relations, tariff situations, I definitely need to bring up copper to you because you've got a strong focus on copper. And we've just quite recently had this 50% tariff news from Trump on copper. And I am still trying to work out, how official is this? How is this really going to play out? Do you have any initial thoughts there?
I was wondering when it was a comment, but it wasn't enacted. I read another source close to the White House saying it's going to happen by August 1st.
Okay.
That the tariffs that they proposed are going to become effective.
Very interesting. And what kind of an impact do you see that having? Because the immediate effect seems to be the copper price went way up. But I don't know if that will stay or if there will be some, downward movement as this continues.
The U.S. imports half of the copper it uses every year. So the price was going up probably because U.S. customers were saying, we need copper and we're going to buy it now, and jam the price up.
Yeah.
But longer term, they're still importing a lot of copper. So it's going to encourage a lot more exploration and development in the U.S.
Yeah. Okay. But it'll take some time, I imagine, for that to play out. One more point on these geopolitics and tariff things going on. When we talked in March, you'd said, we might be getting set up to see a full-on trade war develop. So how are you feeling now? We seem to be having these deals done, but there's a lot still in flux.
I think the world's still trying to figure out what's going on. And it's Trump's first volley is, we're going to put heavy penalties on everything coming into the country in the form of tariffs. And then he waits for people to go, well, we don't want that. What can we give you? And that seems to be his game. Just put an outrageous statement on the table. Everybody gets worked up about it, starts thinking and saying, this is very dire. We better do something. So we give him something. And with the hope that he's going to reduce the tariff a bit or maybe remove it. Say in the case of Canada, start protecting the border, start protecting the Arctic, more money on defense. And then we have these internal trade barriers that we've had. And we always say we're doing world trade and free trade markets, but we can't move between provinces freely. So that was a really good thing. I mean, if we could rip that apart. But you have to give a concession to them. And I really thought that all our senior politicians, when the first word of the tariffs came up, they should have just hopped on a plane, gone to Washington, and said, what can we do to prevent this from happening? What would you like us to see us do? Rather than running around saying, oh, he's going to take over the country and we've got to be very nationalistic. And come on, guys, look into this. He couldn't do that. It'd have to go through a number of levels of government in the U.S. before they can do anything significant. And then there were a number of people in the U.S. that we don't want another California. I mean, this is a socialist state that we don't want part of us.
Yeah, I think there was a lot of frantic action, maybe without so much thought. So this gives us some idea of what's going on in the world, but let's take a look at what's happening with the company. So I know since we've last spoken, you're working on transitioning production at the Fox complex from Froome mine to the Stock mine. Yes, I wondered if you could talk about what you've accomplished so far and the company's long-term goals there.
Okay. The Froome mine is about 35 kilometers away from the Stock property. And at Stock, we have our mill processing all of our material. So there's some immediate benefits. One is we don't have the transportation cost because we're going to be mining right underneath the mill. Two, the ore is softer than what's at Froome, so we can put more material through the mill at the same time. So we'll be producing more gold as a result of that. Three, and very importantly, there was the previous owners of the company, of the where the Froome mine is, put an 8% metal stream on the Froome production and on Black Fox. But the effect of that was we were selling 8% of our gold at just over $600 an ounce.
Wow.
And that's gone. So there's an increase in revenue, a reduction in costs, and we're driving a ramp right now, and it'll be in production in a year's time.
Very good. And I also wanted to check in on what's going on at Los Azules down in Argentina. I know there's a feasibility study in the works. Are we expecting that this summer?
Yes, in August sometime.
Any further updates you can share there, or should we wait for that to come?
Well, the PEA was very robust. It was calculated at $3.75. So it looked at a 27-year life, capex of about $2.5 billion, and low operating and all-in sustaining costs. There's been inflation, and it's been greater than the devaluation of the peso. So labor rates have moved up in price. Equipment costs have gone up because there's more activity. So we're going to be looking at higher operating costs, higher capital costs, and a slight reduction in resources. But offsetting that is, copper's at $5.50 right now. So it's a full $1.75 above where we were, which is almost a 50%. Well, it's about a 40% increase over where it was when we did the study. So we still have a very robust, large copper project, that long life. And we also found a number of, or have identified a number of possible satellite deposits. It's a porphyry system, and porphyry copper systems tend to occur in a cluster. So we think we've seen copper veining, copper oxide, quartz veining, molybdenum, which is associated with copper, on at least 7 areas. So as soon as we get the money for the feasibility study, which we're running around trying to do right now, we will be looking to put more money in exploration and seeing, do we have another deposit or two?
Okay, this is exactly what I was going to ask you, if there are any other company milestones or events we should be watching for. And I know you put a lot of value on the exploration work as well. So anything further to share?
Well, if you look at our gold assets, and I have to apologize because a lump are measured, indicated, and inferred together, which security commissions don't like. But anyhow, I'll just say all of our gold assets is about 4.2 million ounces. And of that, 80% is in the Timmins district. There's 37 million ounces of silver. And attributable to our 46% interest in McEwen Mining, there's 19.5 billion pounds copper. And if someone wants to do the math, we have 54 million shares outstanding. But so we have an asset base right now that is allowing us to expand production in the gold. And that's it. That has been driven by our exploration program, which has been a large expense. We've looked at a sensitivity table 5 years out from now with the expansion of production. We're looking at free cash flow of around over $300 million per annum. So that's a good picture.
It is a good picture. I will let you get back out into the show floor, but before I do, any final thoughts you would leave investors with?
Commodities right now are at a 55-year low relative to financial assets. Commodity prices are cyclical. So sometimes they're low, sometimes they're high relative to financial assets. Right now we're at a very low point. with the turmoil in the world, with the geopolitical conflicts, with the tariffs, and economy is still running, we're going to see higher commodity prices. And gold is not a commodity, it's money, but it's also going to go up. There's been underinvestment in the area, and demand is growing from a number of areas, so that I expect the price to rise. And so I would think, and also, if you look at mining stocks as a percentage of global equity portfolios, it's about 1.5%. When you get into the manias, gold manias, commodity manias, you'll get up to 5%. So you have 3.5x from where we are of the amount of money coming in. And I would suggest there's consolidation about to happen in the mining industry on a much larger scale than we've seen. The treasuries of the big companies are filling up quickly. Their pipelines are empty. They need growth, and they're going to be buying. And the intermediates are going to be buying juniors. And the juniors are lagging.
Across the spectrum there.
I'd say start putting more in your portfolio of gold, silver, copper, and any other commodity you like.
Sounds like a good place to wrap it up. So thank you as always for coming on to go through what's happening in the world and of course at the company. This is great.
You're welcome, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Rob McEwen with McEwen Inc.